Okay, well, good morning, everybody. Thanks for joining today's webinar. My name is Shauna. I'm here with Lou Software, powered by Evasys. And joining me, I have Renee Burton, our Director of, Director of Accounting, and then Kerry McFarland, who is our Accounting Implementation Consultant here at Evasys. We also have Shannon Stein on the line, who is our lovely panelist today. We are talking all things accounting, year-end and month-end closing best practices. We think that this is a very timely conversation, being that it is about the end of the year, also nearly the end of the month, and you guys are all likely knees deep in closing your books and making sure that everything is wrapped up for the year. So lots of good content to cover today. Before we get things rolling, if you look down on the right-hand side of your screen, there are three little shapes, a triangle and a square and something else. If you go ahead and click on that, there's a button that says Q&A. If you have any question through today's conversation, I'm sure there will be some questions that come up. Just go ahead and type those in the Q&A box, and then we'll pause about halfway through, and then at the very end for Shannon to call out those questions, and we'll make sure to get those answered for you live today. So with that, I'd love to get this thing kicked off. My first question today, Renee, I'm going to throw this one at you. And my question is, what are some common pain points that businesses might face when trying to close their books? And then second to that is there any way that software or technology can help with any of those pain points?
Yeah, sure. So if you think about kind of what it was like before software to close your books, what that meant was, just making sure you had everything in your books. And it's really the same thing, but with technology, you're able to do that much faster. And then you have a lot more time to look at reports, to make sure that these things are all balancing out as part of that reconciliation process. And I think what causes people issue most of the time is not keeping historical records, not keeping a copy of your GL every month, not doing timely reconciliations. When you put these things off, they tend to be a lot more difficult to complete because when you're dealing with all the transactions of your business. So if you have to do that all at once, it can be really overly complicated. So closing every month, make sure you're doing that timely and keeping those historical records. So that way, if something does come up down the road, you have something to look back at, and you also can tell if your balances have changed from when you last reconciled them to kind of be able to look at where those changes occurred.
That's such a good point. And I think when you mentioned looking at all of the transactions of your business, it also, the reality is businesses are moving every day. It doesn't stop just because you're closing your books. And so if you're not closing your books on a monthly basis or regularly, I can imagine that if there is something off or something that's not reconciling, it's probably really hard to remember the scenario or remember that customer or that bill or exactly what transpired, because you're also in the business, running the business and doing things on the day-to-day. So that's a really good point. My next question, Renee, is there are some folks on the line that maybe are bookkeepers and they employ a CPA to do a lot of their accounting. If you had to say like three reports, what are three reports that a CPA might want to collect from a bookkeeper or business owner to be able to reconcile and close their books appropriately?
Sure. The top two are going to be your balance sheet and your income statement, or P&L. They're the same thing. But in addition to that, I would say most CPAs are going to want to see a general ledger or a trial balance at minimum. But it kind of depends on what your CPA is doing for you. If they're doing just your taxes, or if they're doing maybe a compilation or an audit for you, They're going to need more things if they're doing that kind of stuff than just doing, simple tax return or something, Schedule C. So, but those are the top three: the general ledger, balance sheet, income statement.
Yeah, and then I will say what's really cool about Lou, obviously we all work for Evisys and Lou, so we know it well, but something really cool that was thoughtful when they were creating the software is the fact that a CPA can get access to Lou for free. You don't have to pay for a license or for a seat for that person. So if they need more information or want to go grab more reports, it doesn't have to be this back and forth conversation or the bookkeeper sending them the reports and hoping that they've translated what they need. That CPA can just go into the system and grab whatever reports they need if the business owner wants to set it up that way free of charge, which is pretty cool. So pretty thoughtful there. One more question for you, Renee. What are, we've been talking a lot about assets. I know a lot of clients have been asking lately about assets and tracking assets and what does that look like and how do I go about that? Do you have any advice for keeping a deprecation schedule or asset tracking when it comes to accounting in year end and month end?
Sure. So when it comes to depreciating property or capital assets or long-lived assets is what we call them in the financial accounting world. You really need to understand what the asset is, what its economic value is, and then you can determine the period of time or the method that you need to use to write that down every month. And so once you've got kind of this front end part figured out where the time period and the value of what you're writing down, then you can put it all in an Excel sheet and just, run it through the period it needs to be through. And then every single month you could go into Lou, record a journal entry. And one of the good things about Lou's journal entries are you can actually just copy the one from the month before. So a lot of times companies will use a straight line depreciation method for book purposes. And it's generally the same every month unless you're adding more assets or writing something off as like a disposal or a sale. So you could just copy that journal entry, and even if your depreciation amount has changed, you can just simply update the amounts in the journal entry. That way it makes it a lot easier. And then you can, pull up the Lou financial reports to balance it out to your schedule. And makes it really easy. On the flip side of that, if you're not really sure how to figure out the front end information that you need, get with a CPA or someone who can kind of get those details worked out for you. And then they can generally get you a schedule that you can use every month to make that journal entry.
Yeah, that's awesome. I think that's a great point, that if you don't know how to come up with a schedule or you don't know the right numbers for your business, get with a CPA and grab those numbers. And then if you need help with how to put that into Lou or the right process, then I think that's, Kerry, where you come in and you can help. If somebody can provide the schedule and their numbers, you can help them guide how to put that all into Lou.
Absolutely. I actually, in previous lives where I was in the bookkeeping role, I had a spreadsheet that I would keep, and I am more than happy to share that with anybody who thinks it might be helpful. And we can kind of manipulate it to suit your particular needs.
Yeah, perfect. Yeah, every business is a little different. I'm going to pause really quick and just shout out to Shannon to see if there's any questions.
We don't have any so far.
Perfect. Great. Thanks, Shannon. My next question, I have a little bit of an answer to, and then maybe Renee or Kerry, you guys can chime in from an accounting perspective, but we get asked a lot, or we have this conversation a lot around inventory. Businesses that we deal with and our clients here that are on the line, most all of them hold some level of inventory, which is a little different than some other businesses. So my question is, or the conversation I'd like to have rather, is why is it important to do physical inventory counts? Why is it important to know your true inventory numbers, and how often should people be doing physical inventory counts? Do you guys have any perspective on that from an accounting side? And then I can kind of answer it from just a business perspective.
Yeah, so generally I would say how often should you do it is at least monthly if you can. It really depends on if that's even possible, depending on how much inventory you actually have. Some people have huge warehouses, and doing a physical count of that would not be possible on a monthly basis. So there's this theory in accounting where, costs can't outweigh the benefits of what you're doing, sort of thing. So you really want to be mindful of that and make sure that it works for your business and that it's efficient, of course. But reconciling, it's essentially a reconciliation of, taking account, looking at your book value and making sure that they match. And this is especially important if you need to give your financials or your books and records over to a third party that's going to be using them to either extend you a loan, purchase your business, or just generally you have some kind of covenant with somebody that an investor or a lender that requires you to turn in your financials to them. So it's especially important to make sure that the value of your inventory is displayed correctly on your books. And there's also some accounting rules that play into writing down inventory when like something is obsolete or it's not selling like for the amount that it should be selling for, that you thought it was going to sell for. There are some things that you need to write down to comply with general accepted accounting principles. So
yeah, makes a lot of sense. And I think from a business perspective, it's really interesting. I think I know there are folks out there that aren't aware of, some of those GAAP rules around inventory because it is kind of a niche thing, but there are rules around it. And you do have to be aware when you have parts or chemicals or even big ticket goods that are years and years and years old. You need to handle those appropriately in your books and in your financial records so that you're not overstating your inventory. And from a business perspective, it is really important to do inventory regularly. I would always suggest doing a physical count twice a year. I think it is my expectation, kind of minimum. Like Renee said, a lot of people have huge warehouses of product, multiple warehouses of product, and then retail stores. So it is a lot of work to ask you to potentially close your business or come in hours before your warehouse or store start transacting inventory to do physical counts. But it is really important to make sure that you have accurate data. And then in the off months that you're not doing a physical count, I always suggest doing just cycle counts. Cycle counts are pretty simple. They're not too cumbersome. They take maybe an hour of time for 2 people in a store or warehouse to just grab one category of product and do a blind count and then count as exceptions just to make sure that things are tracking through the year. Because the last thing you want is to get to the very end of the year, do your physical inventory, be off by 10%, and then you have a huge loss, and it's just not a great way to end your year. So if you can do those cycle counts in between, it helps just to keep things on pace and identify any issues that you might have throughout the year. Like, oh shoot, I noticed that this one product we've been mis-selling, right? It has the same color cap on it, and we've been selling it as this product instead of this product regularly at point of sale. So you can come up with some solutions throughout the year rather than being victim to the results of poor inventory management. So I think all really good points on inventory. And Renee, to your point, yes, your financials need to be correct if you're giving them to a third party like a lender or selling your business. But you also might have to give your financials to somebody at any point because audits exist. We all are in the world of paying taxes. And so there's a lot of people out there that you might have to give your financials to at any given point. So it's just better to be prepared than to try to get prepared, especially with something like inventory management, which is pretty massive. Thanks for that. Kerry, did you have anything to add?
To that? No, not really. I mean, only just seconding what Renee was saying, it's always important to keep track of your assets because you want to know how much of that you've got. It gives you a value for your business. So,
Yeah, totally. Yeah. It's your second largest asset. Your first largest asset in your business should be and is your people. And then your second largest asset is typically inventory. It's what you spend most of your liquid cash on. So you need to protect it and make sure that it's in a good place. Speaking of giving your financials to third parties, there's been a lot of talk out there in the world about succession planning. Some people are going employee owned. Some people are passing their business down generationally, and then others are selling to equity firms. So I'm curious, Renee and Kerry, if you guys have any suggestions or best practices for folks that might be considering selling their business over the next couple of years and things they should be thinking about when it comes to their financial records.
Yeah. So when you're thinking about doing something like that, it's a big thing that you're doing, and I'm sure it feels that way to most people, and it can be definitely overwhelming to think about where to even start with that, especially when it comes to your books and records. And if you're, kind of a small mom and pop shop and you don't have any strict accounting requirements for producing, audited financial statements or anything like that, it can be really scary to say, okay, where do I even start? So the first thing I would do if you're thinking about doing some kind of transition in ownership or restructuring or anything like that to a different ownership type, just take counts of your assets, your inventory for sure. That's going to be really important. And reconcile your account balances. Take the time to look at what's in your general ledger, what's on my balance sheet, and can I support it? Like if I have $10,000 in accounts receivable, do I know who owes that money to me? Can I produce a report, an AR aging that shows me what makes up that $10,000, and go through your balance sheet line by line and make sure that you can do that for each one of your accounts. And once you've got that done, you're pretty square. You can get with a CPA to tackle issues. We've got resources here, Kerry, who can help you tackle issues and help maybe look into things that don't quite make sense. As far as if your software, if your aging may be off a little bit or something, we can help you with that. And yeah, just generally getting those things ready for the bank or lender or other owner to look at and feel confident that you're giving them transparent records.
Yeah, that's such a good point. And it can't be like we're planning on selling or migrating our business in a couple of months. You need to really be thinking about this long ahead of time so that you have historical data and you have accurate data and you have time to figure things out. If there are inconsistencies or things that are incorrect, you need some time to be able to reconcile all of those things. I know, Kerry, we have a program at Evisys called Premium Support. It's been taking off pretty well. People seem to be really excited about it. And one piece of feedback I get from folks often is the accounting piece of it and what you get with Premium Support for accounting. So would you mind walking us through how people are using that 1 hour of free accounting consulting with Premium Support monthly? How are people using that? And do you have any suggestions for folks on how to use that?
Sure. Well, you get 1 free hour of accounting consulting each month. And then you get a discount of 25%. I think you have to pay for a block of 4 hours for that. But, there's a whole lot of things, especially this time of year when you're trying to wrap everything up and reconcile. If you run into any, anomalies that you can't solve, I can be your go-to. You can also have me just sort of keep an eye on your books and look over your reports and stay ahead of, issues and identify issues for you and provide some sort of guidance on how you can dig deeper into that. um, it's not just for issues within the software that you might have, like, how do I do this or how do I do that? You can literally use me for any of your accounting reporting, and I can help you to, like I said, identify those problems ahead of time, because staying ahead of those instead of leaving them until the end of the year is always going to benefit you in the end.
Yeah. And I think something else that you do really well, or you're really powerful in, is for somebody to give you their books and just let you look over them quickly. An hour is not a ton of time when it comes to accounting. These processes are lengthy and it's a full-time job, right? So we don't expect you to solve world hunger in an hour, but I think what you can do, and you have done miraculously for people, is you can look over their books and you can look over their financial records and you can identify any glaringly obvious problems or questions, like, why is this entry that way, or why does this not match up here? And I think sometimes it's easier for you to see those versus the person that's doing the entries into the books and living in that world every day, because sometimes we're blind to our own work, right? And we need somebody else to check it. But in the accounting world, it can't just be a random person. It needs to be somebody who's familiar and knows the rules and the guidelines and all of that. And I think that that's where you really come in, as somebody can provide you their financials. You can take that hour, you can look over it, you can provide them back with a bunch of questions and things to dig into. And then if they do have issues or they need help solving or rectifying, that's where that 4-hour block of consulting at 25% off really is incredible, because they can buy 4 hours, it's 25% off. And then you guys can work hand in hand on reconciling and rectifying those issues that you guys might have found together. So
absolutely. And if people reach out to me, the first thing I'm going to do is have a conversation with them and figure out how their business kind of runs, and a little bit more information so that I have that background knowledge, before I go digging in. But I can run, comparison reports and really try and spot issues that might have occurred, and then, working together, we can solve those.
Totally. Yeah. So with that being said, I know we're talking a bit about just consulting and premium support. There's a lot of options we have to support you. If you guys are interested in consulting at all for accounting specifically, you can just go ahead and email support@evasys.com. And in that email, just mention that you're interested in consulting for accounting. Those will all get pushed through to Kerry, who that's what she does. That is her job here, is to help with those sorts of things. And she'll pick up the phone, get on a call with you, dig into your business a little bit more, and identify what exactly you need. If it's just a small, quick question, or if it's a more ongoing accounting touch base, monthly or something like that, we'll work out the best plan for you and your business. So yeah, just support@evasys.com, mention that you are interested in accounting consulting, and then Kerry will reach out to you for those questions. Awesome, ladies. Well, I just have one more kind of question. It can be either for Kerry or Renee, whoever wants to take it. But do you guys think that it's valuable or helpful for people to have like an accounting checklist that they go through monthly or weekly or yearly, or do we just leave it up to everybody to remember their own process? Like, do you think it's helpful to have an SOP for closing your books, or do we just leave it up to every individual to do it their own way? What do you guys think of that?
Well, I'll start with that, and then I'm sure Kerry's got some things to add for sure. Yeah, the accounting close checklist, or even non-closed items can be put on a checklist to make sure they get done throughout the month, is extremely important. Not just for making sure that you remember everything you need to do, but also to establish that these things were done and who they were done by. Because if you think about accounting at a very basic level, you've got, transaction reporting, you've got segregation of duties as far as internal controls go. So this accounting checklist allows you to segregate different people from doing things that they otherwise might have conflict in doing. Let's say, you've got one person writing all the AP payments for your business, and then you've got that same person reconciling the bank account every month. That opens a window up for fraud. And let me tell you, fraud can happen to anybody. So it's really one of the first things you learn in accounting is segregate your duties, and a closing checklist is an excellent way to enforce that you have those separate duties as often as possible to prevent those risks from occurring in your business. So I think it's absolutely critical. I couldn't close my books without an accounting checklist for sure.
Cool. Well, if you, we at Lou, we have an accounting checklist for Lou Accounting. It would work for other softwares likely as well. If you want to get your hands on that and you want a free copy of our accounting checklist, just go ahead and leave your email in the Q&A box, and we'll be sure to personally send that out to you after this call is over so that you can get your hands on that. So yeah, just email in the Q&A box and we'll send you the accounting checklist. And with that, I think that's all the questions I have for you ladies. I'll pass it over to Shannon to see if we have any questions from our listeners.
We don't have any questions. I think that's a lot of information to absorb.
Yes, it is. Well, thank you ladies so much for joining us. Renee and Kerry, again, I just really appreciate it. And I know it is the middle of December. Both of you ladies are trying your best to wrap up the year and everything. So just thank you again for taking the time away from your day to spend with our clients and give them this really valuable information. And with that, we will end today. Thank you all for joining us, and we will see you all in the new year. Thanks so much. Have a good one, everyone.
Hi, everybody.